Yesterday was kind of scary on the markets. I won't lie to you. I was watching the charts last night and we got Bitcoin, which dipped down to 59,000 at one point. And it felt like, I must be honest, it was like the first time in a long time where it actually felt like a little bit of a capitulation. And I think one of the reasons for that capitulation feeling was because you were watching STRC go down, and STRC actually went below 80. At the same time, MicroStrategy was below $100, now actually at $92 a share. And so it felt like a bit of a capitulation. The markets were red. The NASDAQ was red. Silver was down. Silver was down at $58. Gold was down at below $4,000. The NASDAQ was down actually, and actually it turned up afterwards, and I'm going to show you exactly what it turned down afterwards. But I must say, for the first time in a while, I actually felt like the markets were actually bottoming. I felt like there was a capitulation. And it wasn't only me. I got messages from friends. I mean, I don't know if you want to read this message. It says, bro, should we just pack our bags and go work at McDonald's? How you doing? I said, haha, yep, again. He says, doesn't stop hurting each time. I said, yep, just a few more months. He says, you still have conviction, and are you accumulating or are you tapped out? I said to him, look, I have conviction, but I've got no more cash. I'm overexposed. He says, I'm definitely overexposed. And that's the feeling out there. The feeling out there is that people are losing conviction in the crypto markets. And in particular, what we saw last night was not only the crypto markets coming down, but it was crypto, it was gold, it was silver, it was the metals. And I think this is where I think the market's wrong. I think the markets have got this all wrong. And I think that if I'm right, what we're going to get is we're actually going to get a recovery trade. Now, I'm not going to sit here and say, oh, we're going to get this like pump in Bitcoin and it's going to go back to all-time highs. But I do believe that if I'm right, then we're going to get a recovery trade. And my thesis is not only a crypto thesis. It's a thesis that goes way beyond crypto. It goes into gold. It goes into silver. It goes into a whole lot of the other charts. So that's what I want to show you today. I want to show you why I think the market is so wrong and why I think that we could be in for a crypto pump. And again, I say I don't even get like, wow, we're going to go up to all-time highs, but I do think we're due for quite a big bounce. So if that sounds good to you, that's what we're going to be talking about today. It's going to be a big show. Let's get the show on the road, guys. Let me know if you were online last night, and let me know if you felt that brutality, that capitulation feeling, that feeling that here we go again, another bad day in crypto. Crypto's going back down. Crypto never goes back out. Let me know how you guys were feeling about that. Yeah, I mean, that was what I felt last night. And I can tell you that it wasn't only me. It was a whole lot of other people reaching out to me and just telling me how bad they actually felt. But the markets are wrong, and I'm going to show you the markets are wrong. As it relates to crypto, we did see Bitcoin actually going down quite a lot. And at one point I saw Bitcoin, I didn't see it go all the way down to 59,000 exactly, but I saw it at like 59,500. And I thought, oh goodness, here we go again. That leg down that I told you was going to happen yesterday is coming much quicker than we actually thought. What I realized though, is that the one reason why crypto, I mean, lots of markets were moving down. The gold was moving down, silver was moving down, all the markets were moving down, but crypto was moving down a lot more. And it started moving down sooner. One of the reasons why I think crypto was moving down is because of this, right? So remember that Binance yesterday came out and said that they originally applied for a Mica license to be able to operate in the EU, and they applied via Greece, and that license was, they got an indication that their license wasn't going to be approved via Greece. And so yesterday they came out and they said, okay, they've withdrawn their application through Greece. And that was about 1 week before Mica actually gets implemented in Europe. Now, the problem is that if Binance doesn't have a Mica license on the 1st of July, which is a week from yesterday, then Binance is going to be in a position where it can't service its EU clients. Effectively, we think, we're not 100% sure yet, but we think that if Binance doesn't have some kind of special dispensation to continue operating in the EU, that means that on the 1st of July, Binance, effectively, if you're a Binance EU customer, you'll still have access to all your funds. Your funds are safe. That's not a problem. But the problem is that they won't legally allow you to trade. And so what I think started happening yesterday when Binance announced that they'd formally withdrawn their application from Greece, I think a lot of people started saying, hold on a second, we've got a Binance account. We're holding crypto. We need to liquidate our crypto and get the money off the exchange before the 1st of July because we may have problems. And that's why I said that I think for the rest of the week, there actually will be quite a lot of unusual selling pressure. And the reason why there's going to be unusual selling pressure is because you've got all these Binance EU clients who are looking at their accounts and going, look, I've got some Bitcoin, I've got some ETH, I've got some SOL. I'm going to sell it now. I may buy it back on another exchange. I may sell it and then go and buy it back on another exchange after I've moved the money. But for now, the first transaction is a sell. And when you get that first transaction as a sell in the whole of Europe, when people start preparing for the fact that the exchange isn't going to have a Mica, then that's going to cause a whole lot of selling pressure. So I think that it's not only Binance EU, it's a whole lot of other exchanges, but Binance is the biggest exchange by far. It's got over 50% of the liquidity. And so, look, it's very hard to ascertain what the actual numbers are, and I'll show you what I've got here. So I'll take you through it. But here's the dashboard that the researchers made for us, and they're saying, look, Binance's annualized revenue in the EU is about $1 billion. We don't know exactly what. There's 18 million clients at risk. Now I don't know exactly. They don't publish how much money they've got in US. European client deposits, but you can imagine that some percentage of Binance clients are going to sell their crypto and withdraw their money before the 1st of July, and that's going to cause selling pressure. I did write a long tweet explaining what happened, because I've gone down a rabbit hole of what the hell actually happened and why Binance had to withdraw. You should go to my Twitter and read this tweet, because it will make your blood boil. It's this little witch with her little fingers everywhere trying to attack crypto. Go and read that tweet on my Twitter. My handle's at @CryptoManRun. I'm not going to read it out yet, because I think it's a little bit long. It'll take up too much time on the show, but really it'll one of those things that's going to make your blood boil. Like, it'll really, really, really make your blood boil. All right, let me take you to where I think the market's wrong. So from a crypto point of view, crypto is getting it a little bit harder, as usual, getting it a little bit harder than all the other markets. But I want to show you where I think the markets are getting this very wrong. And again, I say to you, if I'm right, if my thesis is right here, and the markets are wrong, then I think that there's a massive opportunity and there's going to be a massive bounce. And I'm going to show you exactly which market that bounce is going to be at. If I'm wrong, we just remain where we are. So so nothing actually happens here. So yeah, that's what we're going to be talking about. I do see that there's 700 of you here, and I see there's only 94 likes, and I'm thirsty. So I'm going to have a drink of water, and I'm going to give you an opportunity to make right and hit the like button. And if you're not already subscribed, you should probably subscribe. There we go. That's more like it. Let's get the like ratio up, and let me carry on with the actual alpha of the show. So here's where I think the markets are wrong. Look at these charts over here. If you look at the charts over here, what you realize is that you got gold. Gold is now down. If you look at it since January, since the 28th of Jan high, and you go to where we are today, gold is down 30%. If you look at silver, silver's also had a very, very, very rough time. So if you look at silver, silver peaked over here. This is the war. This is when the war started. This is 29th of Jan, and today silver is down 53% from its January high. You look at Bitcoin. Bitcoin's also down. Bitcoin was going down slightly before gold and silver was going down. So that's the charts, and this is the charts of gold, silver, copper, all plotted on one chart. And specifically, this chart shows you what happened since last week's FOMC with Kevin Warsh. So you can kind of see that what you're seeing from since last week is that gold, silver, copper have all started moving down pretty aggressively. The stock market hasn't started moving down. Now, here's where the markets are pretty confused, right? I think we can break this up into two types of markets. The first type of market is the honest markets, the markets that are not hyped by this AI trade. And the other market is let's call it the dishonest market, the one that's being hyped up and pushed up by the AI trade. So right now, whatever the Nasdaq is doing doesn't really have any bearing on what we're about, what markets are actually doing. What does have an impact, or the markets that are actually telling you the truth, are the gold, the silver, and the copper markets. And as you can see, gold is now broken down through some real key levels. And they're starting to look a little bit scary if you're a gold bull. And speaking of gold bulls, tomorrow I've actually got Peter Schiff on. And I'm going to be talking to Peter Schiff about a lot of things, but specifically I'm going to talk to Peter Schiff about MSTR, because I think he's going to have a lot. Oh my goodness, look at this. Look at it. Look at the STRC. It's now at $77. $77. Holy moly. I've been calling this for a long time, but yeah, I said my level here is about 60. I think STRC gets to about 60. My researchers laughed at me when I said it. Who's laughing now, guys? Who's laughing now? Not the billions of people or the billions of dollars that actually bought STRC. Anyway, let's go back to it. So you got the markets. The markets specifically started moving down since the FOMC last week. And I want to dig into why this is happening. Why are markets actually moving down? Because this is where I think that the markets are wrong. So the reason why the markets effectively are starting to move down, or those markets are starting to move down. Remember, we exclude the stock markets because the stock markets basically, they're immune from going down at the moment because they're all about the AI trade. If you notice what happened yesterday in the stock markets, the NASDAQ was slightly down. You can see it over here. So the NASDAQ was slightly down. And then we got the Micron earnings, right? And Micron delivered much higher than expectations on their results. Their revenue was 41 billion. The market expected 36 billion. The adjusted earnings per share, 25 versus 21 expectations. And the margin up 84.6% gross margin. Holy moly. Versus 37.7 a year ago. Imagine a business this big doing a 37.7%, 84.6% margin. That is absurd. Anyway, what it shows is that, and look at what the Micron chart is doing today. Micron's up 18% today. It's absolutely crazy. So we cannot pay attention to the stock markets. The stock markets are intoxicated by AI. But the one thing that is worrying the real markets is this chart over here. And this is the chart of the 𝗙𝗫𝗓. It's a dollar index. And what you can see is that the dollar index, the 𝗙𝗫𝗓 is actually finding a lot of strength. It broke above the $100 level, which is this big support resistance level. And it's gone to 101 and 102 and 103 and whatever else, whatever those numbers are. And here's the big problem. The big problem is that the markets were buying things like Bitcoin. They were buying things like gold. They were buying things like silver because they were expecting a dollar debasement. They were expecting the dollar to weaken. They were expecting the Fed with Kevin Warsh coming in to loosen interest rates and to start drowning us with money. That's what the markets were expecting. And as a result, they thought that the dollar would weaken. And that's why they call it the debasement trade. However, it looks like the markets are scared that there's an about turn being done. And that the markets are now bracing for the opposite of a debasement trade. For a trade where instead of the dollar debasing or the dollar getting weaker, they are looking at the dollar now getting stronger and they're going, wait a second, we now have a problem. The first part of the problem is that you get people like Scott Bessent admitting that they're trying to strengthen the dollar, not weaken the dollar. And that's got markets on edge. Listen to this.
Dollar dominance is essential, and everything President Trump is doing here is, if you look, the new Venezuela is invoicing in dollars. They're coming back onto the dollar system. They've been sanctioned. They were not allowed to translate or to transact in dollars.
So Venezuela is going on to the dollar system. Who did they just announce a ceasefire with? Another big oil country, Iran. I wonder if Iran will start trading in dollars.
And now, the dollar is going to be the centerpiece of their trade. They were selling discounted oil to China and not getting dollars. We're seeing in the Iranian negotiations, the Iranians will be invoicing in dollars. So everything we are doing is pushing the dollar.
Will also be invoicing in dollars. They're working to build the dollar to make the dollar stronger. The market was counting on the dollar becoming weaker. The market was counting on interest rates going down. The market was counting on a weaker dollar. Trump is building a stronger dollar, and all these expectations of interest rates actually going up. And when you look at the dollar chart, you can see that we bounced off this trend line, and now the market's worried that the dollar is going to strengthen and start going back up and follow this channel over here. And as you know, the minute that the dollar strengthens, any asset that's priced in dollars starts to weaken, right? So you get, when the dollar goes, starts to collapse, stock markets when dollar goes up, the stock markets start to collapse. Same thing with Bitcoin. When the dollar gets stronger, Bitcoin starts coming down, right? Anything that's denominated in dollars, when the dollar strengthens, that price actually goes up. So on the one hand, the market was expecting the dollar to get weaker. One of the reasons was the fact that Kevin Warsh was coming in, and Trump wanted a yes man who was going to lower interest rates. Now, here's where it gets a little bit tricky, and this is where I think the markets are very wrong, right? So now, instead of investors expecting rate cuts and therefore a weaker dollar, the dollar is hitting 13-month high, as investors are actually banking on rate hikes. So we were hoping for rate cuts. The market's now telling you that at the next FOMC meeting, they're actually expecting, not the next one, but the one after, they're actually expecting a rate hike. Okay, so not a rate cut. And this, by the way, this was earlier on today, before the inflation numbers actually came out. This was on 2 rate hikes this year. So the market's starting to price in rate hikes. Rate hikes are making the dollar and the dollar index more attractive. For those of you who don't know why this happens, when you raise interest rates on dollars, right, because this is the dollar interest rate, then you say, hold on, it's so attractive to hold these dollars because you can just get a higher interest rate that I actually want more dollars, and that drives the dollar price up. And that's how the dollar gets stronger. And so now, all of a sudden, because the market is starting to price up interest rate hikes, the dollar is getting stronger, and the market is starting to price the end of the dollar debasement rate and the beginning of a stronger dollar, and that is making risk markets like Bitcoin, like gold, and like silver actually go down. Hold on, I just have to look at STRC again just to see that I'm 75. No, I mean, come on. What is there anything research? Is anything going on, or is this just a spiral? I mean, I really hope that this is just a spiral, but researchers will keep us updated. Anyway, here is where the markets are wrong. The reason why the markets are calling for a rate hike in the next move is because inflation is up at 4.2 and it's been increasing for a while. Now, the reason why inflation was going up was because of the oil price and because of the war. However, when I look at the oil price now is back at pre-war levels. This is where the war broke out. It was on the 28th of Feb, which is somewhere over here on the charts. It's there. And now we're pretty much back at pre-war levels. So have a look at that. We're pretty much back at pre-war levels, as you can see. And so the oil price, the inflation that was being caused by the oil price going up is now back at pre-war levels. The numbers of that inflation of the oil price coming down will only reflect in the inflation numbers in 2 or 3 months. So the market is worried that Kevin Warsh is going to raise interest rates because the inflation is going up. But the markets are wrong, and I'll show you why the markets are wrong. The first thing is that the oil price is back to pre-war levels, and so we should be getting the effects of that coming into the markets in the next 2 to 3 months. Here is a table that basically shows what the market was expecting, where the market was at Feb 26 and where the market is now. At Feb 25, 2026, which just before the war, the GDP forecast was 3.1%, now it's 3%. Crude oil was at 65, it's now trading at 70. The unemployment rate was 4.4, now it's 4.3. And this is and the 1-year inflation break even was 2.18%. And so the market it was actually pricing rate cuts, right? Now, 2 rate cuts. Now we're expecting rate hikes, but everything is exactly the same as where it was in the war. At the same time, the forecasters were thinking that they were going to get a very high PCE number today. Now remember, PCE is the inflation reading, X energy and X food. We got the reading. By the way, we were first again with this reading. The 247 News Wire just keeps bringing you the news first. I did write a post about this saying, as trading becomes more automated by AI agents, the speed at which you and your agent receive information is going to be more critical. We've been building a highly curated newsfeed specifically optimized for speed and accuracy for agents to trade off. You can get it for free at 247 Wire. You can see that when we post news, it's that we're always first. Maybe not always, but you can see we were first. The other ones were 10 seconds behind us. And 10 seconds in a world where AI agents are trading is a lot. 19 seconds on this piece of news. Anyway, going back to it, we got the FOMC. You can go to just go to 247Y and just follow it on Twitter. It's so simple. Like just go and follow it. It's for free. We got the PCE. The PCE is basically flat or as expected. So no hot PCE readings. The GDP came out exactly where we're thinking. And so you got to go back to what Kevin Warsh is coming in and he has a job to do. His job is to reduce interest rates. That is his job. That's why Trump appointed him. He came out at the FOMC. And at the FOMC, he basically said, look, we can't give you any information because we waiting for data. And he at the same time said, look, we're starting a task team. Do you remember that he kept saying we're going to get these task teams?
Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look.
So he's basically said, look, we're going to have a fresh look at what inflation is. Now, we know that Kevin Warsh likes inflation that excludes energy and excludes food. And so what I think is going to happen is you've got the price of oil coming down now. The war is pretty much over. Oil is at the same levels that it was before the war, and prices are going to start to follow. The thing is that if prices start to follow, I agree with this tweet. I agree with this tweet. I think it's quite a profound tweet. He says, comparing now to pre-war, there's no reason for the Fed to hike rates unless Warsh just wants to take a stand to reestablish the Fed's credibility. I know he says he will, but I don't believe him. I'm long. Yeah, he talks about the options that he's long. I don't think Warsh has any leg to stand on in terms of increasing rates. He cannot increase rates. Why? Because it's a temporary supply, and Warsh has said a million times that he's looking at the core or the source of inflation and not the actual inflation number. With that in mind, there's no way that Warsh can increase interest rates. The market, and specifically when I say the markets, I mean the honest markets, the gold, the silver, the Bitcoin markets are pricing rate hikes because that is what the market's currently pricing. But I think there is a higher probability that we're going to get a rate cut, or at least that's going to start coming down, especially now that the war's over and the oil price is starting to come back down. If that's the case, then the market's wrong. And if the market's wrong here and the expectations here shift from here to here, all of a sudden we're going to start getting a run in the honest markets. So that's my thesis. That's why I think that the market is currently wrong. Yeah, that's pretty much why I think the market's currently wrong. And I think when the market does come around to see what I think that the market's going to see, I think then we're going to get a bit of a run in the honest markets. Let me know what you think. Let me know if you think I'm right or wrong. Again, this is my opinion. If you have a thesis, you stick to your thesis, and if you're right, you'll end up making money, and if you're wrong, then you'll end up going broke. That's how it works, basically. No, you have to exercise risk management. I want to just see the STRC price because I think it's spiraling. And 74. Look at that. 70. I mean, this got to be a buy at some point. I think I'm actually going to start buying it soon. People are offloading this STRC thing. They're capitulating. There's a capitulation in STRC, and I think that there's a good opportunity to make money. I'm going to start bidding this thing pretty soon. All right. I want to show you a few things. So first of all, guys, remember I told you yesterday that South Africa are playing in the World Cup. They did play in the World Cup. I landed up making a lot of money. The reason is I took the bet yesterday that South Africa were going to win. It was a wild card. They beat the North Korea, and South Africa now going through to the next round. And so yeah, as I mentioned to you, I was messing around. I was taking the trades here on Rain. I was doing it on my on another computer. For those of you who want to use Rain, it's pretty simple. You sign in with Google, or you can connect a wallet, and it's literally just deposit money, and you can actually start playing. They have a whole lot of like very cool prediction markets. As I said to you guys, the ones that I'm looking at are the World Cup winners. Still France are the favorites. Still Argentina are second. Still Spain is third. England still fourth, but I mean, I think they drew last night, which wasn't a great result. Also, there's a lot of other very cool markets here, like of things that you can bet. So it's like who wins the groups, who's going to win the golden boot. There's so many markets here. It's all on rain.trade. It's all here on rain.trade. I think you should go and have a look at it. I do want to show you something else when it comes to prediction markets, because I found something which is, I think, pretty novel. Now, again, I'm going to say, be honest, these guys are not sponsors of ours. They're like, I want to show you this. This is not a sponsored post, but I want to show it to you because I really think it's a very cool post, a very cool service. So I did actually tweet about it. For those of you who are playing prediction markets, I think you want to pay attention to this. So I tweeted about it here. Geez, I tweet a lot. Here we go. It's called Pocket Universe. Now, how does Pocket Universe actually work? So I downloaded it. You can see that when I download it, I've got a Chrome extension here called Pocket Universe, right? Now, when I go to Polymarket and I want to take a bet, so I'm going to go to a bet on Polymarket. See, it lives as a Chrome extension. It waits for me. I'm going to go to a bet. This bet over here is the Bitcoin up or down in 5 minutes on Polymarket. So I click here, and when I click here, it says it's analyzing. Market intel is ready. It's a pop-up. It's not part of Polymarket. So I click here, and I open it, and what you can see is it's actually analyzing the bet for me and telling me of the security risks in the bet. So like here it says there's not a lot of liquidity, so it may be hard to exit. It gives me, so what's red is obviously a risk, and what's green is obviously a thing. And then it basically is high risk, see flags. I was messing around with it earlier, and one of the things that it actually warned me, it said not the oracle, but the way the bet is resolved is dubious. You shouldn't actually take this bet. So it's almost like a assistant that lives on your Polymarket. It's not part of it. The other thing which I noticed, did you guys know that Polymarket takes a fee of 7%? 7%! Like you see, it warned me about the fee of 7% that this trade is actually taking. It's absurd. I didn't know that. I must be honest. I didn't know that Polymarket took a 7%. Hardis, did you know Polymarket took 7% fee? No. Well, Polymarket takes 7% fee on a trade. 7%. How can you make money when it takes 7%? If I didn't have this Pocket Universe Protector, I would never have known that. I found, so there is a link here. Again, they're not sponsors of ours. Let me just show you something here. So here we go. Show you something here. You can see here. So there's a link to their website. You can download. It's a Chrome extension which lives in your Chrome. And then every time you go to Polymarket, it does this. And then it just opens up the window. What I've noticed though is that like if I go out of here, and like I think this is what they call a safe bet. Okay, wait. So now it's analyzing this bet. This is the World Cup winner. It's a green bet. You see, this is a green bet. It means that all the indicators here are green. Let me give you another one. Let's just go to like a crazy market. Let's go to crypto, because crypto you'll probably find millions of crazy markets. And let's go to here and just click on this bet, and it'll analyze the bet for me. It says, okay, there's no liquidity in this bet. There's only $5,000, which means you won't be able to exit. Also here, what it's showing me is it's showing me that there's a high whale concentration risk. So in other words, it says 3 whales hold 64% of this pool. And it tells me why I shouldn't take this bet, right? And it's flagged. It's concentration risk. It basically says, look, it's a high risk bet. Maybe don't take this bet. So it almost protects you when you want to take Polymarket bets. So maybe go and check it out. I think it's a really cool tool. All right, my friends. Holy shit! I'm actually watching the Bitcoin price here out of the corner of my left eye. It's not looking good, bruv. Do you remember that guy? It's not looking good, bruv. Hardest. Do you remember him?
Yeah.
Yeah, I'll bring him back here because I found him actually on the internet earlier.
Yeah, it's not looking good, bruv. Big man thing, yeah. It's not looking good, bruv. It's not looking good. Big man thing, yeah. It's not looking good, bruv. It's not looking good. Big man.
Yeah, I mean, I'm getting messages here that say MicroStrategy and MSTR and STRC are getting murdered. You know, STRC is getting murdered. MicroStrategy is also getting murdered. $86. Holy! It feels like a capitulation. It feels like a real capitulation on MSTR and STRC. But we will follow this. I mean, we shall follow it. We shall follow this. Let's just watch it for 2 more minutes. So, STRC 74. Sure. I still think it's got another 12, 13 cents to go. I said my level here is going to be like 60. And then I think we're going to get some kind of recovery. Anyway, I'll do a show about that. I've got Peter Schiff coming on tomorrow. I'm sure he's going to have a lot of views. Also on the weekend, I've got a real treat for you guys on the weekend. I've got Joe Consorti. Remember Joe Consorti? And I've got Vinny Lingham. And they're going to debate whether strategy is the best or worst thing that ever happened to industry. If the charts are anything to go by, then yeah. All right, friends. I'm going to take a look at what I can lose more money on. Yeah, you can look at this single match yellow card. You can speculate on anything these days. You really can. My friends, I'll see you again tomorrow. Until then, trade well, my friends.